What's going on, traders? Hope everybody's having a great weekend. Want to do some analysis here on the E-mini S&P futures as well as the NQ for NASDAQ. We're going to go over the weekly time frames and the daily, then break it down, of course, a little bit more granular and look at some day trading levels. Before we get into the charts, though, let's first take a look at the economic calendar for this week. We've got a big week ahead. And of course, reminder as always that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, so let's look into the economic calendar now and see what we have in store for us. Pretty quiet Monday here for us. Not too much on deck on Tuesday either, but Wednesday really kicks off the week with CPI fresh and early at 8:30, and then we have FOMC federal rate decision coming in at 2 o'clock with Fed Powell speaking there at 2:30. Initial jobless claims at 8:30. PPI as well coming in. And then Friday pretty quiet with import price index and consumer sentiment from Michigan coming out. With that said, I want to remind you guys that Monday and Tuesday, especially Tuesday, may not have the most favorable price conditions coming into a major data day. We want to be extra careful on Tuesday. Going to be a lot of hesitation in the market, so I wouldn't be looking for any big trend moves. Probably a tricky, choppy day for the indices. So if you trade futures, be careful with those. More of a hit and run or do nothing type of day. Certainly will be sizing down into the start of the week. All right, so with that out of the way, let's start to dig into some charts. And we're going to start off, as always, with the weekly chart, and we're going to look at the E-mini S&P futures here. Let's take a look at the chart just based on a candlestick perspective. And what do we have here on the week, right? Well, we have a nice full-bodied green candle. Tried to push up higher. Failure to really accept up higher. We briefly made a new all-time high. I believe it was either Friday or Thursday. I think it was Friday, but it was unable to hold, and we pushed back into the range overall. So really, I mean, we have a wider balance now. I know we've been looking at a few different kind of balance ranges or zones that we've been kind of trading in here in this area, and certainly here looking from the weekly perspective, it certainly could be a lot wider here. I don't usually take the extremes like this. This for me is a bit wide. I wouldn't really call this the balance, although it is the range over the last 2 weeks from the high and the low that we have traded. I'd be a little bit more comfortable with kind of mapping it out somewhat more like this, and really looking at this being a look above and falling back into the range. So I definitely will be paying attention to that. But overall, structurally, right, as long as we're still holding over, okay, let me zoom out here. Okay. As long as we are still holding over where, right? We did close in the upper part of this weekly candle, but the main area that we want to watch is, for the most bullish momentum, is staying right over, right, the prior highs here. So, and that's right around where these highs here, they are right around the 53.30 basically is what we want to watch right now, and we closed the week at 53 half. So really that's the level that I think we want to be paying attention to for a pivot, whether or not we're trading over or under that 53.30 zone. I think that's going to be where we want to pay attention. And you can also see here that if we just come back up and we kind of have, right, like this, and when we were looking before at, actually let me zoom in so we can see a little bit better. And when we were looking before, when the market had sold off, right, we were also kind of looking at this kind of 2-week balance right in here. And this was the last stand that the bears had to potentially have a rejection, right, when they had come back up here to retest, right? And once we broke back over, that's really what gave us that push to be able to come up higher. Now, granted, we have kind of stalled out. We've really made a marginal higher high here, in the sequence, but nevertheless, as long as we still stay over these highs, I think that leaves the door open for us to be able to trade up higher. Certainly will mark off last week's range here of actual body for next week. So I'm going to mark off right here. And then I'm going to also mark off here. Right. So in addition to that, I'm also going to mark off the swing. And I'm going to do this in different. Okay, so here's really the range that I'm going to be watching for us to potentially also trade within into FOMC, probably within that, we're right where we closed pretty much at that 53, 54 down to 5,300, about a 50-point range there. I'm going to watch, and I'm going to watch these areas. If we do really start to break underneath, and of course we're looking at this from the weekly perspective, if we start seeing the daily closes underneath this 5,300, right? First, of course, we're going to have to get on that 5330 as we already mentioned earlier. But from this weekly perspective, we start seeing candles on the weekly, or even, on the daily, but even more so on the weekly. We would be likely then, I think, to trade down here into the week low of the 20th. And that will probably bring us down, and that number is going to be 5273. So I would watch for that. And if we do break under that 5273, then I would watch, again, wider ranges. We're looking at the weekly here. I would look for us to trade back into last week's low down here, potentially in the 5245, 5250 area, right? And the same is going to go for the other side here. If we start to break over, and it's not really much because remember we closed at 52, we pretty much closed at 2 ticks off of this high, right? So if we start to really see maybe an hourly or a daily acceptance, this could even a 4-hour, I would have to say, not really an hourly, but 4-hour or a daily candle close up over the 54, we really might have that chance to come up and trade into those highs from that new all-time high once again. And actually, let me rephrase that. I would not actually even go in the 4-hour. I would need to see the daily closes right over here, and then we could look to target up here from last week's trading high there, right? So I'm going to use that kind of from the weekly perspective as kind of a guide here to just kind of formulate a little bit of a bias if in fact we do start to close the days over here. But that being said, of course, with FOMC, it's really going to be hard to say what will go on. I would be more likely to see that consolidation as I had mentioned previously. So, and of course, we can also really, we could also really take this, if we look at this from a kind of weekly, kind of a flag here that tried to break out, right? And we didn't actually see that acceptance. What we would have loved to see is the candle really close higher here and really, how should I say, solidify that higher high. This is kind of a weak higher high that it put in. And I mean, it did put in, a higher high from here, from the week of the 13th. Sure, we can give it that, but it's very, very marginal, at least as far as where this body is, right? We're not really counting this. Now, what we would really want to see being bullish would be those candles closing, or if this candle had closed up in here and we saw price, close in this area, right? That would have been much more solidified. Now, I'm not again saying, and I'm not inferring any bearishness by this. All I'm just saying is that would have been really what we would have want to seen for the most amount of strength, in my opinion, right? Because we can still make that argument, like we said earlier, that this overall is just a balance range, and if anything, this is a failure to break out of the balance range, right? Because if it actually did break out, we would have seen this full-bodied and we would have closed up by the highs. So only this week will tell, and that's going to be the same kind of situation right here. But we can also certainly, as I mentioned, the kind of flag, we can make this argument, right? So even if we had some type of a pullback, I don't want to use that one. Even if we had some type of a pullback, we just retest and then we can head back up. Right. So let's come into the daily chart here and take a look at that. Once we look at that from this perspective, then we will pull up some of the other charts that we already have worked out for this level. Why don't we pull out a weekly trend chart, though, very quickly while we still are on the weekly. Where are my weekly? Is this it? No. Here we go. All right, not there yet. I wanted to see if we were close to it. And this is from last week's video here. We'll flip over to the weekly, the daily now. So we made this last week. And sure, from this point of view, I will say here now we can look, and this will give us actually a little bit more, right? We said earlier that pivot 53.30 could give it about a 5-point range there. I'm not a huge support and resistance. I definitely more supply and demand type of trader. So you could give it a little bit more room, 5 points there, give or take. And we've got nice confluence, right, with this previous level we had at from last week, 52.26. So from the daily perspective, as long as we're hanging out like this, we can consider this kind of a high and tight coming in here. Where's my drawing thing, right? But if we start to see trading underneath, then we can look for a little bit of a deeper pullback. And we still have the 20, right, there at 52, basically 5,300 even. So, and, keep in mind here, this area right here, so there's tons of areas that the bulls are still able to come in and defend. So even if we broke the 20, just from the price structural perspective, I would have, no problem bringing up this kind of scenario, right? So, but as it stands, like I said, we can use that 53.30, 53.25 here as another general area from the daily bias perspective. Whether we want to still focus on really buying that dip or potentially to work a little bit more on that short trade. Let's pull up some of other views here that we have. And this is, okay, this was, okay, I think that, well, this is an old, this is when, I have this from when we were trading, when was this? Over a year ago. I think that it's actually interesting here. I'm just noticing, you know, as we pull it up, that we're actually coming back to retest. When I first started doing videos on YouTube, it was down here. But I do find this interesting now, that we are coming up to retest this area. So I'm just noticing this now. I'm going to come back, depending on my schedule, maybe midweek. Maybe I'll post it on my Twitter and clean this up, because that's kind of an interesting retest that we just want to keep in mind. Coming back from some older price action, you know, way older. So, all right, let's move it. Okay, where was the other chart that we were doing? All right, this kind of is illustrating more of the same. Here, we're still over everything. Oops. Okay, I don't really think I've got that actually too much more to say about the daily, just otherwise. Ah. Okay. Here's our other video that we've been, or our other chart that we've been monitoring. From the daily perspective, we're still good here on the Hello Momo. And we're still holding the zone, so really it's just kind of chop sideways in a bullish consolidation unless we really start to break back inside of this area. So that's pretty much how I see it. All right, let's move it along here, get a little bit more granular. Let's look at some day trading levels. All the same pretty much, because we really haven't gone anywhere. Although I have a little bit more or less to say on this one, because we have not, this is all-time highs up here. We haven't really traded up here. So I don't have much for you if we go higher. So that's to be discussed. But we can talk about the short side a little bit, and we have a little bit of upside here we can talk about. Certainly we would want to see, we'll go over the bullish side first. This is an hourly chart, and we're going to see here the 9 and 20 starting to cross over here. So what are we going to have to do? Nice confluence here as well for the long trade. You can see that this 53.62 half basically is pretty much lining up with the sloping down hourly 9 and 20. So if bulls get to recapture over here like so, right, we can look for price to then drift back up here. We would look into this area right here, as we've seen some reactions right here as well. So right around 53.72, I would say 53.73 to 53.75 would probably be my target, about 15 points thereabouts to the upside if we do recapture 53.62 half. For the bears, they can look for that short trade potentially coming down. First target, of course, if we were to take this trade, would be back down to the equal lows here. So if we were coming up here, look for a short against this, 3 or 4 point risk, you know, whatever your risk is, and then we would first take a partial here down at 53.51 thereabouts. We've certainly got that 50, so you could potentially just look for that, but they might front run that a little bit. What's the actual equal low here is, it is 53.51. So, but if that equal low is taken out, and it also does kind of line up right here, I would say it would be very easy just to drop down into the 53.45 half right here. You can see the reaction that we did have here before. And if we did in fact break under that, we would look for trades ultimately back all the way here, down to 53.30, 29 area. And we talked about the importance of that pivot. I probably would still look for a partial right here. $53.37 area, and then we would target obviously right here, and that would be the final target. We have to see acceptance under 53.45 for that to play out, but I believe we would. You know, we might stop. You might just get 53.52. You know, we might stop right here up at this high. That wouldn't surprise me. 53.31. So, but that would be my short side target. So again, if the bulls get up over the 62, we can come about 10 points into 72. We get back over the 72 and hold. I think it would be free and clear to 80, 53.80 half, and then back to the all-time high, 53.85 half. So there you go. Again, watch out for that choppy, inconsistent price action on Tuesday especially, but we could see a little bit on Monday, and Mondays are usually prone to that type of behavior anyway. So just be extra careful this week before those big major data releases. Okay, so let's get into NQ now here and take a look at that. Let's open up the daily chart perspective here. All right. Okay. Very similar story here. Nice full body candle coming up. Same type of situation with the balance here range that we have been watching. So I'm going to do the same thing as we did on the NQ. I'm going to map out the actual trading range here and here at the low. And then we'll take the high. Change that. Beautiful. Okay, so last week's range that I'll be watching there is pretty much 587, and then the high about 19,033. Okay, so if we do start to look over that, we can look to the higher liquidity up here right at the all-time highs, and if we start trading underneath, I just want to make sure. Okay, yeah, I have that pretty on there. But if we end up trading underneath this area of the weekly range, then we'll come back down here and see what's up at the weekly 9 once again at the 18,436 area. So that would be what I'd be watching from the bigger picture perspective. With that being said, here the range between the body and the body here are pretty wide. So we've got certainly a lot of play room here for NQ. That being said, we could also look about halfway, right around, is that 18? right around 18,815. I would say you can also look at that. If we are still trading above that level here, we can also use this. If we are above, we can look for trades up to here, potentially then up to here, but generally looking for trades in this area on the bullish side. If we see the acceptance here, we'll be looking for more trades down towards the bearish side, like so. Or also we can have that potential of chop, but maybe more so that you would want to focus on trading more towards that short side if we are trading in that lower area. Only if we break under the body here will we come down and get to see these extremes. If we start to take out this weekly trading low here, well then we'll probably more than likely see down at the 18,240s again. Especially if we see a weekly close underneath. So, all right, let's move right along here from the weekly perspective. Again, we can also, it looks very similar. This is much more full-bodied candle. This did close to me a little bit stronger. Obviously, NVIDIA has been running into the split, and this week also NVIDIA will be switching completely over, and the split will be taking effect. So let's also keep an eye on that. It's going to start to trade differently. So if you do trade NVIDIA a lot, or used to the way it has been moving, I would take a couple of days back, step back and watch it. A lot of times, because of the amount of options flow premium that comes in on that particular ticker, and how it also affects then the weight of all the options flow cumulatively, it's going to start to move differently. So it might have a bit of a different kind of movement to it. Study it, watch it. If it's normally something that you trade, I just want to throw a little bit of caution out there as it goes through the split and everything kind of readjusts and settles. All right, so let's get into the daily now. Okay, daily chart here. Again, you can see it tried to push up. We made a brief new all-time high, came back down. Here's what I'm going to be watching. This area is going to be key here on the daily. Let me extend it a little bit. You can see we traded right into it. And I'll mark off. This is from last week. Right, that 18,950. Okay, so let's pay attention to that. This is Friday's price action. We start to see acceptance down underneath, and we can definitely look a little bit more bearish from the daily or daily bias. But until that happens, even if that starts to happen, I would assume that we will probably come back and retest around the 18,900. Maybe we come back, maybe we come a little bit lower and retest that daily 9. Still be bullish though. Unless we start really seeing those daily closes underneath that. Then if we started to see that, I think then we could trade to the lower part of this range. So I would, again, still be bullish, and potentially if we are, seeing a major sell-off or a bigger sell-off from FOMC or a huge dip, or as if we just see a general pullback this week, if we'd start to trade down into this 18,800 area, I would still be looking for a potential buy. And you can see here that is also pretty much the daily close of the 28th session. So look for those lows there as a potential longer term dip buy. I could not have a problem with making an argument that we could do something like this, and then we go ahead and rock it up like so. Now, but if we do start then seeing a weekly close or a daily close underneath like this, okay, now we can start to talk about a different narrative, and potentially look for dip buys coming in with that 20, as it probably would start to kind of drift in this area like that, right? If we start to break down underneath, we could certainly see price come down like this, and then we look for the springboard off the 20. Another possible scenario there as well. So still bullish overall. I'll definitely pay attention, but there certainly can be trades that we're going to take intraday, or that can be had for that short side. I mean, moving down from 18,950 all the way down to, what is that, about 115 point range here, thereabouts. So certainly money to be made on both directions if we do start to trade back down into this general zone. So be careful though, although there are certainly trade opportunities in here, we want to just keep in mind of the bigger picture of what's going on, and not really look for these huge massive trend days, because more or less we're going to be stuck like this, and we'd only see really that move if we did something like that, right? Okay, so same song and dance here as far as the levels for NQ. Let's get into some of those day trading levels. Like, very similar from last week, as again we pretty much have not moved anywhere from a bigger picture perspective here. And oh, I forgot to mark off these. Oops. Come on. Okay, so as long as we are holding still above 19 to, we can call it 1920. As long as we're holding over that, we can pretty much stay bullish, in my opinion. Overall, we do want to obviously pay attention here. The 10-day hourly VPOC sitting at 1963 half, basically, as well, confluence with these downsloping 9 and 20. So we could, even though we are hanging out over this, we could end up seeing pushes into this and then getting rejected, coming back down. Certainly a trade one could consider if you are bearish. And then, of course, if you took that trade, we'd be trying to target down towards these equal lows, basically back towards the figure at 1900. We start to break under 1900, then we would be looking pretty much about 25 points lower, 18,975 thereabouts. And if we started accepting underneath, we'll target right down into the 18,950, 18,939, and ultimately 18,927.30 zone. So that's what I will be looking there for the short side. I'd feel, even though this technically, again, for me is bullish, if we are hanging out here, we have that potential again to see a scalp trade or some type of movement. It's 40 points up, so you don't really need more than that on a day trade, or even for your day. You can make good money on that. But I'd feel a little bit better if we actually saw some a 30-minute candle close, something like that, over this. We'll see how this adjusts in glowbacks, but over this, and then we can look for those trades to come back up, probably right here into the breakdown POP. So I would say we could come up into that 1920 or 120, 119 area right here. Where is my right here? And this is really what's going to be the thing. If we start to really see acceptance over this, so over 120, then I believe we would have about another 35 points up right into that all-time high once again. And when we start getting over that, then we can start looking towards that 19 200 if we really start to see acceptance over the 19,155. So that's where I think we would go. But this is really going to be the thing that's, I'll feel this. I'm somewhat confident. You know, I'm bullish, but I'm cautiously bullish on an intraday from here. Feeling a bit more bullish, a medium bullish here. Here, I'm very bullish if we start to see, you know, this. Because then we'll come into the equal highs right here. And if we break over, well, then we'll get that move, as I mentioned. You know, whoops, overshot my arrow there. But then we'll get the move, right? And that pretty much takes us right, you know, right there. So, and you've got your bearish path, you know, like so. All right, but watch out again for that chop. You could also do this. So, oh, it's not what I wanted. Ah. So I would also watch out. Just be careful of getting too committed to any type of a bigger move, especially on the Monday or Tuesday, because we could very also possibly see this. So, I mean, there's certainly, this is pretty much 17. I mean, so it's still about 80 points, but they're not going to make it easy, right? A lot of fake outs where it would look above, maybe VPOC look like it's, and then it's going to come back down, come back, maybe break and look like it's going to break up and then come back up, look like it's going to break out and then break down and then go all the way down. You know, real headache stuff. So just be careful of that as well. Because you've got fake breaks here on both sides of games. So be aware. Okay, let's move along here. We've got some interesting developments in the dollar and TNX. I wanted to go over. Things were looking so nice for the bulls when it came to the dollar. I was going to have to say so nice if you're bullish on equities and SPY. Dollar was really looking like it was going to tank. But again, our 104 level has come back in. We've talked about this ad nauseum. We've now broken back over this downtrend. So for me, I mean, this is really a nice setup here. We're going to do CRT into 50%, right? Look, 50% retrace. Mid-candle breakout would come up into the 105. Under, you know the drill. Whoops. But this is what I would think that we could see. Just to pull into here and then up. With the data, of course, it's hard to tell. But so again, cautiously. Here I'm still I'm bullish, like cautiously bullish. Here a little bit more confident. But this is like a medium bullish now again, and over 105. You know where we're gonna go. So that's gonna be the tell there. Of course, that's gonna put pressure there on the equities. And if we're under 104.50, then we can look for those 104s again. Really looked like the dollar was going to break down. But she said no. Let's take a look at it from this viewpoint. Let's look at it from the weekly. It was just about to break down. Look at this. So that's wild. Oops. So she's still kind of threatening. Here in this consolidation pattern. But to be fair, I'm just kind of noticing this now. But to be fair, we have to also look at it from this perspective. The dollar right now, really, it's just a ranged market. Right, we take... So until... Really, either one of these two things happen, it's all noise. I'll still use those other areas, you know, as those, you know, some pivots. But bigger picture, really, we're just sideways, and this is what's going on. But certainly we can make that case here. We've got low, higher high, higher low, higher high to the top, equal highs. But here, swing low, higher low, higher low. What could we see next? Back to equal highs, or do we finally make a higher high? If so, then pull back, come up, and we'd probably come back up to 111 area, 110. To the POP. Right, this consolidation breakdown. So, let's mark this off like that. So we'll watch. Okay, another interesting thing that has developed was TNX. Again, oh man, I thought the story for rates was over. And no, it's not. Almost broke under the 43. Look at this. Oh, almost, but back in the uptrend channel. The yield's not going away yet. Okay, we did close over the weekly 20. We didn't do it over the 9. I'll concede the 9. And again, I mean, I don't really have a bias. I don't really care. I'll just call like I see it. I want the markets to fall. I don't care if they go up either. I'll say here for the bulls, we did recapture the 9, but we're coming up right into that 20. So we will probably end up seeing some type of pullback here. But let's see if we pull back into this trend line again, and then we make a push like this. That's one scenario. Or we break under, maybe come back, retest, and then we'll come back towards the lows. Two scenarios there that we've got for us. Which one will happen? We will find out this week with what the Fed decides to do. But, geez, I really thought they were going to close under that 43 this week. All for naught. Something else I wanted to look at. Oh, okay, yeah, let's go into TLT now here. Okay, TLT, great run. We've been watching this retest. Let's just zoom out so you can see the bigger picture. Right, boom, 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 broke out, retested. And now Green candle, but we did pull back. And we just under 50 cents under our pivot at that 92 level. Just slightly under. But now we can look for a potential BRB here. So what we could have, and we may just bounce off to 20 here. This gap down though, you know, on the this is from non-farm payroll. Really slugged metals as well. And then obviously the dollar ripped and the TNX shot up, but still bullish here. We can potentially bounce from here, or come down a little bit lower to here, set up with the BRB, and we can see if we can get back up into, basically my TLT target would be around that 94.50, 94.75, right in the VPOC there. Almost got there this time. If we break under, well, then we've got another story, and we would trade back down here into these equal lows around 88.42, 88.50. So that's what I'll be looking there. And of course, this, if this happens, this is a bearish scenario. This is a bullish scenario for the markets. Bearish scenario for the markets. Another thing I'm looking at, RSP here. The divergence in RSP, I'm definitely watching. We made all-time high. And where is RSP? Well, we are kind of in a compression. Sure. And we can certainly make that same argument I was making on VIX. Right? Higher high, higher low. At least from this angle. But we can also make the opposite. That's why obviously it's the compression, right? Here's our swing high. Here's a lower high, lower high, lower high. All right, so we've got both, right? And that's, whoops. That's what's obviously making this wedge compression type of pattern here. But the thing that I am noting is more so that we have SPY making all-time highs, but yet RSP is not. And cannot close over the daily 9 and 20. What is that telling me? Kind of under the hood that the breath is a little off, right? I have a little bit of green here coming in the Momo. Still about below the zero, but a little bit of power there. If we start breaking under, basically 163.50, we're going to have some issues here. Right. We can see trades lower. Need to see this hold here and get up over and make an attempt like this. Back up into the 166. We see if we break over, come back, and then we can come up, you know, and target up here and target here. Gosh, those lines are horrible. You get the idea, though. So that's what I would be looking for there on your RSP. But the main thing that I'm kind of noticing is the divergence. Why is only SPY making an all-time high, right? And we'll also see that illustrated when we get into some of the internals here that we're about to take a look at. I think there was one other thing as far as the charts I wanted to pull up. RSP. What else was it? I don't remember. All right. Maybe it'll come to me before the end. Of course, this is the equal weighted SPY, for those who don't know. All right. So let's get into, all right, well, let's just start off with the VIX as we normally do. Put call ratio, nothing here. VIX basically floored in our kind of zone where we typically look for potential reversals, but you know, it just is pretty much hanging out right in this area here. So no really concern for volatility other than normally when we get into this area, we can start to see something like this. So let's wait and see. It could be very interesting if we do actually kind of get this type of pattern. And you know, we've got a couple of different names for this, if you know, but certainly would be a potential bullish situation here if that happens. But as far as it stands, we really got we have nothing really too much to be worried about, and we're not even showing any overbought or oversold conditions yet. So I think VIX will probably come down a little bit lower, all things being equal. Now, new highs. Okay, let's go to new highs versus new lows since we were just talking about the breadth a minute earlier with RSP. Okay, here, new highs versus the lows. All right, making new all-time highs on Friday, yet the breadth here, new highs versus new lows throughout the market, just under the zero line, question mark. Okay, that doesn't make very much sense. This is definitely, I would say, a cause for maybe not concern, just caution. I don't know about concern, but certainly caution here, as we saw illustrated in the RSP, and here we see the new highs versus lows that this should be a lot higher. You'd think all-time highs we'd have readings up at least over 100, right? 200, but no, right down here. So not something you would want to see in my opinion. And as a matter of fact, what I'm going to do here, let's duplicate this. Let's go like this. Oh, let's go like this. Make this a little smaller. Kind of got 3 equal highs there, so I'm going to mark that off right around 75. Let's have that right there. Just so that we kind of, if we get over 75, we'll be starting to feel a little bit more enthusiastic. All right, definitely pay attention to that. Another thing we have been watching, of course, is, let's just go to the how many stocks are trading over their 50-period moving average in the S&P 500. Just below 50% here. This one's obviously a bit more sensitive because it's the 50-period moving average, so I like to watch this one a bit more, but still under the zero line, so that is not good. We want to see really hold over that 50%, excuse me, not zero line, the 50%, feel a little bit better, but we also do have this swing high here and a lower one here, kind of a compression going on here as well, just like the RSP. So we can also kind of make this type of a potential argument as well. So let's see how this resolves, but we want this, of course, above 50%. The amount of stocks trading over the 200-period moving average a lot slower, but the steepening here to the downside is a bit more concerning to me, I would have to say, overall. Look at the curve down. Look at how this one came down. Now look how much stronger of the slope that this is. I'd say this is a little bit more of a warning sign or a cause for concern than this is at this moment. Very interesting there. And I will be paying attention to that. Ideally, we want to see this over 75%. We're still over 50% though, so no real overall big causes for concern. Anything like this is just more or less keeping our eyes out for potential daily lower highs or a weekly lower high. We start seeing readings under 50% on the 200. Well, then we have a different story. But no cause for concern overall there right now. Just 2 little words of caution for potential pullbacks. All right, let's look at the junk bonds here and take a look at what they are doing. Okay, this is interesting. Even though we made a new nuanced higher high on the S&P here overall, because here was our, right, we had our, I don't know if you can really see this here. Let me zoom in a little bit. Either way, new higher, swing low, higher high here over this area. But what's going on in the bonds, right? We almost made equal lows here in the junk bonds. Bit of a bearish divergence here, I would say, from HYZ. Another thing telling me just to be cautious of a little potential pullbacks. Anything can happen on Wednesday, though. Bond ratios. Well, this one's a bit interesting here. I wanted to see the 7-year hold over 115. It did not. This was kind of our pivot here. But the bond ratio, still bearish, back under the 50. So we can see here, same type of scenario that we were looking for before on the bond ratio. One is see this. This is IEF 7-year versus on the TLT, the longer dated, under the 50 period. So as long as it stays under, that can still be bullish for the markets because that can even pull up and then head back down. But as we saw here, what this is the bearish scenario if this does this, just like it did here. Right? So we will watch how that reacts this week. And I don't really just like how the 7-year pulled back. But I mean, it's to be expected. And TLT did as well, obviously. So all the bonds took a hit on Friday. Okay, here's another thing we're watching. The Dow SPY making a new all-time high. Dow is not making a new all-time high. Certainly a divergence again that I want to pay attention to. Transports have not been looking good here. Still vulnerable underneath this 15,220, we can call it, still vulnerable underneath the 200 period SMA as well. And even if price came up into 15,570, it still could be we've got our swing high, right, a lower high here. Even if we came into here, we could just have a lower high from this swing high here. So it would still be vulnerable, but if we still trade underneath 15,220, that's going to be the most bearish situation for us. And the one thing that I want to mention about the transports, and again, this is kind of a little bit more from a macro perspective, so I'm not putting out a major alarm at the current moment, but it's just something we want to be aware of from, again, the macro perspective. What are the transports telling us about the economy overall? Well, the transports, obviously, if we're looking at how the economy is doing overall, if we're seeing the transports doing well, that means what's more goods are being shipped, right? More commerce is taking place, more trade is taking place, and so something I definitely like to look at as far as one of the other potential canary in the coal mines, not only from a price action perspective, but from a macro view, is what's going on in the transports, because that also is giving us a little bit of a clue about what potentially is going down underneath the hood in the economy overall. Not to mention, right, the Atlanta Fed has projected GDP growth to start declining, as well as we've been seeing reports from Starbucks and some other companies that have to do with kind of discretionary consumer spending have been weakening, right? People don't have the money to go out and spend on these extra, that $5, $6 Starbucks every day when they're cutting back. So some of these things I like to pay attention to also try to kind of give me a little bit of a broader sense of what's going on. If we truly had a very strong economy right now, the transports would not be trading like this. And again, this from a bigger picture perspective, I don't know, when we really start seeing real weakness, quote unquote, in the economy. I mean, obviously we can make debates on that and how strong the economy is or isn't at the moment, but with the market making all-time highs, we want to pay attention to this, and I would encourage anyone to look into Dow theory if this is something that interests you, to kind of study up more about these relationships between the transports and the Dow Jones and stuff like that. So there's certainly some interesting things going on here, and also not to mention, and I was kind of posting about this, I think maybe 2 weeks ago, the yield curve has been inverted for over 600 days now, and it's only, again, it's not a matter of if it's going to uninvert, it's a matter of when, and when that usually happens, that usually obviously leads to a tougher economic condition overall. So are these some potential precursors to that? Looking at the transports, it's very possible that it could be. And so it's just something, I don't look at these for no reason and share them with you guys. All these parts and mechanisms of the market are interconnected, and I find it fascinating. And if you're trying to be in the markets, if you should be interested in them as well. So definitely check it out on your own time. But that's just something I wanted to share with you guys on my concern here with what this weakness going on here in the transports really means from a broader perspective. Okay, so, and not to mention the Dow not making all-time highs while QQQ and ES is. So, all right, let's move it right along here. What's going on in VIX futures land? Nothing. We are still in contango. Good. Nothing really problems from the volatility. Monthly kind of perking up a little bit here. Pay attention to that. That is interesting. VVIX is just, again, here on the 75 area. Longer it hangs out in this zone, I'll just pay attention. This is the longer it hangs out here, it just can set up for kind of a complacency type trade, and we can see, you can see what's happened here every time. So we will watch that as well. I think that's everything I wanted to go over this week. I really appreciate you guys taking the time, spending with me, preparing for the market. Remember, of course, what we always say, a prepared trader is a profitable trader. So let's plan our trades, trade our plan. Have a great rest of the weekend. Thank you all to my subscribers. It means a ton to me for you guys supporting me. If this is your first time viewing the video and you enjoyed it, don't forget to smash that like button. Either way, subscribe to the channel, turn on the notification bell, and I will see you guys on Twitter. Remember, Monday, Tuesday, I'm sizing down. I'm trading less, if I even trade at all. Take it easy and just be careful. After FOMC and CPI, we can go back to our regular scheduled programming. All right, guys, have a great rest of the weekend. Take care.